Bitcoin volatility is increasing as we approach the monthly close. And we talked about that yesterday in detail, didn't we, guys? Hey, guys, it's Keith Allen, and big night last night. Graduation for my oldest kid last night, high school graduation. Lots of fun, lots of impressive accolades going around, and couldn't be more proud of her. But enough of my proud dad moment. Let's go ahead and dive into an analysis here as we are approaching the monthly close here. Tomorrow, right? Tomorrow's the last day of the month. So we got that coming up, and that's something that we need to pay attention to because we've got some serious liquidity movement in the order book. Things are changing rapidly. And as we talked about yesterday, it's reasonable to expect some volatility around these monthly closes. It's typical to see some whale gamification. It's typical to see liquidity moving around. And that's interesting because just a few days ago, things were compressing into the range, right? We'd been talking about seeing if we could get price to compress into a tighter range than we've been with an all-time high nearly at 74K and now a low at 56.5. That's just too broad of a range for me. I really been wanting to see price consolidate into a tighter range. It looked like we might be getting that briefly here this week, and well, we'll have to see how things play out as we move into this monthly close. So let's start first with a candle chart, and we'll look at kind of the key levels here, and then we'll see how that compares to liquidity in the order book on FireCharts. So with that, let's shift over to TradingView and see what's up on the monthly chart here. Oh, that's a weekly. We can actually look at this here for the moment since I've got this up. Notice we're right here under this 69K level. That was the 2021 top, obviously long-standing resistance and something that I've been pointing out regularly that we've just failed to validate an RS flip here. You can see it here on the weekly all the times that we've gone up there, and on the daily, it's just like a bunch of candles interacting with this range that have just with this price level rather that have just failed to hold. And so we need to see full candles above that 69K, in my opinion, to really stage the next move up and go after that all-time high and get into price discovery mode. Hasn't happened yet. Doesn't mean it won't, but it hasn't happened. Also notice here, this 21-week moving average is really one of my favorites, and look how it has perfect confluence with this 60K range. 5860 was an area of prior consolidation, dating all the way back to before the prior all-time high, and so that's an important level that needs to hold. And at the moment, it looks like it's in pretty good shape to do so. But in terms of what the upside resistance is, obviously the 69K level is glaringly obvious. But above that, we have had several candles up into the 70K range. So where do we see a potential top there? Really around this 71.5 is where things have been locally toppy since we had this wick up to 73,400, excuse me, 73,800-ish. So that's a reasonable possibility that we could go up and touch those levels again above 70K. The question is, does it hold? Right. So now let's take a look at the order book. And actually, before I do that, just a quick look here on the daily. As you know, we have been testing support down here at the 67K range, and it looked like that. Look for the moment. Anyways, we got a nice bounce from there. But I did want to go to the monthly chart because that's what we're dealing with, a monthly close here, right? We're coming off of a red trend precognition down signal that obviously validating here, unless we just get this massive last minute push above here, which I think is not so likely. That would be what level? 72, 750. That's a long shot here, my friends. But in any case, I do expect a green candle close. A green candle close would have to be where? If we look at where we closed last month, 60,632. So that means we need to close above this red box here, right, to maintain a green monthly close. Now, personally, the color of the candle doesn't. I'm not so focused on that this month. And the reason why is the levels are more important. Okay. So in my opinion, holding on to 60K would still hold on to some structure here, and it would still respect the 21-week moving average. And so if we were to dip that low, which I don't think is a high probability at this point, but if we were to dip that low, I wouldn't let that shake. I'm not. Oh, let me say this: I'm not going to let it shake me out because I'm prepared for that. If we get below this range here, if we get below this red box, then I have concerns that we're going down here into the 50 to 52K range. But we deal with it one level at a time. And for the moment, it looks like things are doing pretty well up here. And that, 65, 67-ish could hold. So now let's head over to FireCharts and see what got things moving today, right? So in the past couple of days, we've seen a ladder of bid liquidity come into the range from about 67K on down to 58K. All right. And it's not huge volume, but it's dispersed, it's distributed evenly through this range. So it doesn't build any big concentration. It's just kind of absorption here, right? And, we've also seen ask liquidity from above coming down, and that has pushed price downward. We saw it here. We saw this move down here. We saw it then move down here. We saw it move back up. We saw it replace here. We saw it move back up. We saw it come down. And then, so now we're sitting here with what's 38, 68, 80, 100 million plus. Actually, if we look at it all the way up to 75, there's a good 200 million plus in ask liquidity overhead here, where you can see it's not nearly as concentrated here to the downside. We've discussed that a bunch here. So if you're new to the stream, I encourage you to check out some of the previous episodes. At least start yesterday, right? These are pretty time specific, but yesterday we went in depth with the possibility of whales gamifying this monthly close as they tend to do, and seeing liquidity move, which is obviously happening. And I also said that we might get a catalyst from the economic reports. Now, I'm no economist. And I would say that my perception of this is kind of a mixed view, but leaning net positive for Fed watchers, meaning sometimes bad data is good in terms of rate hikes and rate decisions. And in this case, jobless claims, not really a huge move, a slightly hotter than projected and slightly hotter than last month's or last week's initial jobless claims. And this is the trend that the Fed is looking to see continue. Continuing jobless claims also. Nothing burger in terms of the volume here, only slightly above last month, but trending in the right direction in terms of the Fed. PCE, et cetera, all of these things, again, mixed, but the talking heads on CNBC, who are far more knowledgeable than I am, sum this up by saying that, if this trend continues, maybe these numbers here today, if anything, quell some of the discussion about a potential rate hike, which crept back into the narrative here in the past couple of weeks. But maybe this quells some of the discussion about the rate hike. And if it continues, if we see these trends continue, then that could obviously build confidence in a probability of a cut before the end of the year. So those are all things that we're considering here in terms of the economic data. But how this plays out to me is still speculative, same as the ETFs, which were net positive again, and have been for the past couple of weeks, right? So that's all there in the narrative. But the charts are telling us what's happening in the now. And in the now, we see liquidity moving, and we see it moving aggressively. And one of the things that I spotted this morning, we have this game going on here with ask liquidity above, moving up, it's moving down, et cetera, et cetera. We had a bit of a rug pull here, or a roof pull, I should say, when it's overhead, a roof pull here at 69K and a pull up here. So these things are actually, it looks like this one first dropped down into 69K from 70.5, dropped down to 69K, and then it rug pulled or roof pulled rather. Meanwhile, this support testing down here is good, right? I want to go a little bit lower because we did see some change here in 60K also. Where did this go? I don't see it. It's not a lot. It's just, a lot of this has been small blocks moving around. And this is not a big block in terms of size. It's not a significant move, but little moves are making things happen. And so I would look to see this move up, but I don't see where. Well, it could have potentially moved right up here, up to price. Okay, and maybe that got filled here, so that's a possibility. And we do see purple whales buying, which is also a positive sign. But what concerns me is when we see this bid liquidity move away. And when you see liquidity moving this aggressively, I'll be honest with you, it's more difficult. I find it more difficult to trust. So because these guys are actively gaming the order book, right? This is the game board, the playing field. And so with it moving like this, I find it harder to build confidence in it holding, which means I don't catch knives, right? Now, the fact that we've had a series of retests down close to 67 is positive, and that's why we're seeing this move here, and the market is gaining confidence in that. I just want to caution you about the potential for a rug pull that maybe sends us down to 66 or 65, where there's a bit more liquidity. Still, the stronger area is 60, but not by much. I think that we will likely stay up above 65 here. If we stay up above 67, all the better, as that helps us build from here, right? So in terms of how high we could potentially go, I still feel like that 71.5 is a strong level of resistance. As you can see, it's stacking here big time. So even if we did wick up, if we get a wick up here or even a wick down there, I think this is kind of whales trying to shake things out, right? And the volatility is something that we see around these monthly closes. So I'm not concerned about the volatility. In fact, I enjoy it. But I want to see where we close. Are we going to close above this 69K level, right? That's the one for me. A close above 71.5, close above here would just be epic, right? Epically bullish, no doubt about it. But look how much liquidity there is above us to get to that, number one. Okay. And no doubt, just as it's moved into place, it could move out. So there is a possibility that we get there. But I would just say that, is it sustainable? And so even if we have that wick, I want to see where we end up. And for me, the level that I have just been watching for months and months and months is right here at 69K. Look at this on the daily, because I want you to see the amount of times we have interacted with that level. And those of you who have been following me for any length of time are probably getting sick of this, but look at all the interaction with 69K, and there's just not been enough strength to hold it. And so if we close above 69K, happened here and here, we broke down, it came back, broke down again. If we're able to close the monthly close above 69K, then we have a better chance of building into this range, consolidating in this range. If not, then we fall back here, and perhaps we continue to consolidate in the 65 to 70K range would be good with me. If we fall back to 60K, then it starts getting, that's just weakness, right? Falling below all of these moving averages, really not something that we want to see. So to sum it up, I want to see a close certainly above 65. A close above 69K would be very, very good in my estimation. And a close above 71.5 would be epic. I think it's just a tall order to think that's going to happen. Looks like we got a couple comments here, so I'll speak to those. And guys, if you, for those following along, if you've got comments or questions, by all means share them. I'll give you a look at the order book while we're watching this. In fact, let's move to the daily chart while I'm looking at this stuff and see if anything changes here while we're looking at it. Santos, man, I appreciate the support you've been showing me, buddy. Been following along for a little while, and I appreciate that. He likes the range, preparing for a later breakout. It does look like we're preparing for that, but it depends on when we get that, where we close here. If we close above 69K again, which is an easy move from here, right? Doesn't take much to get here. What's that? 8 million, another 5 or 6, another so what's that? 18, 20 million between here and there. That's not a difficult move. And from there, an easy move up to 70, right? But is it sustainable? So if we clear these levels, then and get up here, then we need to see bid liquidity moving in quickly to hold price up. Otherwise, we fade back down, right? Game zone price looks like it's in short territory. I would be cautious, right? Because the way this game has been lately, it has been short squeeze followed by trapping late longs and repeat, right? And then go back and hunt those longs. I just be very careful about your liquidity. And if you are considering shorting from where it gets toppy, then I would be aggressive with your profit taking because the squeezes are coming, and the long-term outlook is still macro bullish, in my opinion. So do with that as you wish. I just want you to be cautious and protect yourself, and do not get liquidated. Good morning, Wakas. Appreciate the follow. Mike says 65 to 66 is hardly a rug pull. Sub 60. So, Mike, let me explain. A rug pull means they just pull the liquidity, right? They yank it. So it's just a matter of whether it disappears or not. Sub 60K, yeah, that's scary. 65, 66 isn't even a shakeout. Well, it is for some, not for me. And as I've been saying through all this, if you're prepared for this volatility, and you have decent entries and you're not over leveraged, then yeah, this is all good. As I've said, for me personally, a move to 60K would not shake me out because my entry is significantly better than that. So all I'm looking for is opportunities to add to my position. I've sold some as we've moved up, and I'm looking for opportunities to add to that position for the eventual breakout that I think will come. Now, again, if we can't make it past these levels and sustain, so let's say even if we close Friday above 69K, right? Then we have another weekly close. We got more economic data tomorrow morning. We have a weekly close. Look at this. Purple Whale's buying right now. They're buying into this liquidity. And that's notable too, right? Whales can't make big orders when it's thin like this. So when they find blocks of liquidity like this at levels that they're happy with, then that's when you see the buying come with strength and volume. And that's what we're seeing right here in real time, I might add, here on FireCharts 2.0. So after the monthly close, where does the weekly end? And if we come out of this on Sunday above 69K, that would be very, very strong in my opinion. Really staying above 65K would help us at least establish a better consolidation range, and above 69K, in my opinion, gives us a better chance to start building a new consolidation range above here, so we can go after that all-time high. That's pretty much going to sum it up for me, guys. Again, I appreciate all the support that you guys have been showing me. And want to remind you that if you're interested in any of the tools, you can check them out at materialindicators.com. We are running a extended Memorial Day sale. So if you're interested in FireCharts 2.0 and all of the cool stuff that comes with it, which is pretty much everything that we make, current and future, then I encourage you to check that out. Use promo code MDPP25. I'll put that in the description here in a few minutes for you, or you can get it off the Twitter, off of the Material Indicators Twitter channel to get a 25% discount. Sem says, I think tomorrow's economic data could favor risk assets. Well, we'll see. What is scheduled for tomorrow, by the way? Let's take a quick peek at that before we wrap it up. That's a good point, by the way. Tomorrow we have core PCE data coming out. So that certainly could be impactful we'll be watching that. That comes at 8:30 Eastern time. For some reason, these guys don't respect daylight savings time, so it's actually going to be 8:30 Eastern Daylight Time for any of you following along, and we'll of course be following it with you. With that, I'm gonna go ahead and wrap it up, guys. Thanks again for the support. If you like the live streams, do me a favor, smash all the buttons, help me grow this channel, and we'll keep doing it. And of course, share a comment with me. I always enjoy the comments, and we'll get back to you. What some say monthly core PCE 0.2% below expectations makes more sense to me. I'm no economist, so I will let the economists take that up. Let's see where they are at right now. Core PCE, they forecasted 0.2%. So you're thinking it's going to be below expectations. Well, I guess we'll find out. We got less than 24 hours to find that out, right, guys? And with that, we're going to call it, guys. Have a fantastic day. Trade safe, and make it a good one, guys. Thanks again. Thanks again for the follows and the support.